Water heater and boiler maker A.O. Smith just reported numbers that have Wall Street on edge. The company missed earnings expectations for the first quarter of 2026, and the culprit is clear: China. If you own anything tied to consumer durables or emerging markets, you need to hear this, because what's happening to A.O. Smith could be a canary in the coal mine for dozens of multinationals banking on Chinese growth. Let's break it down. A.O. Smith, a 150-year-old Milwaukee-based manufacturer that's become a household name in China's booming middle class, posted earnings below analyst forecasts in Q1 2026. Revenue growth stalled, margins compressed, and management pointed directly at weakening Chinese demand as the primary driver. The company has bet heavily on China over the past decade, building it into their second largest market, but Chinese consumers are pulling back. Property sales remain sluggish despite Beijing's stimulus efforts, and new home construction, where A.O. Smith's premium water heaters typically get installed, has dropped sharply. The company also cited intensifying local competition from Chinese brands that are undercutting on price while improving quality. Currency headwinds added insult to injury, as a strengthening dollar eroded the value of yuan-denominated sales when converted back to US. Earnings. Markets reacted swiftly. A.O. Smith shares tumbled over 6% in early trading, dragging down peers in the consumer durable space. Investors are now repricing risk for any company with significant China exposure. The broader industrial sector sagged, with names like Carrier Global and Johnson Controls also feeling pressure. Bond markets saw a modest flight to quality, pushing Treasury yields slightly lower as traders hedged against a broader slowdown in global manufacturing demand. The dollar strengthened further against emerging market currencies, compounding concerns for multinationals that this earnings miss could become a pattern we see repeated across upcoming quarterly reports. Clear winners and losers are emerging. Domestic-focused US manufacturers with limited China exposure are catching a bid as investors rotate toward safer bets. Companies like Rheem, a private competitor with stronger North American concentration, suddenly look more attractive. Retailers heavily reliant on Chinese-made goods or Chinese consumers, think luxury brands, auto parts suppliers, home improvement chains with Asia operations, are getting marked down. On the flip side, Chinese domestic appliance makers are winning. Brands like Midea and Haier are not only taking market share from foreign players like A.O. Smith, they're doing it with better margins because they are operating in yuan and serving local tastes more precisely. Globally, this is another data point signaling China's consumer recovery is weaker than hoped. For the US, it raises questions about whether American manufacturers overestimated the durability of Chinese middle-class consumption. Europe, already grappling with its own slowdown, now faces the prospect that one of its few reliable export markets is softening. Emerging economies in Southeast Asia that compete with China in manufacturing could see modest tailwinds if multinationals start diversifying supply chains more aggressively. Australia and other commodity exporters sensitive to Chinese construction activity are watching nervously. For jobs, if this trend deepens, multinationals may reconsider headcount in their China operations or scale back expansion plans, which could ripple back to corporate roles in the US. In real estate, continued weakness in Chinese property means less demand for the very products A.O. Smith sells, reinforcing the negative loop that's kept China's property sector in distress. What to watch? China's April property sales data, due in 2 weeks, will be critical. If those numbers disappoint again, expect more multinationals to pre-announce earnings misses. Also, watch upcoming earnings from Honeywell, 3M, and other industrials with significant Asia exposure. The dollar's trajectory matters too. If it keeps strengthening, currency translation will punish more companies. And keep an eye on Beijing. Any meaningful new stimulus could quickly change the narrative. Stay informed, stay ahead. This is World Financial News.